Hi everyone, welcome to our channel Fintu and you're watching Friday First Cut series. I am Nidhi Manchanda, Certified Financial Planner and Head of Training Research and Development at Fintu. In our last video, we discussed how to select the best equity mutual fund for you. And in this video, we will see when it comes to debt mutual fund, how do you select which one will be the best for you. So without any further delay, let's get straight to the point and understand first that what exactly are debt mutual funds. A debt mutual fund, basically it is a mutual fund scheme where the fund manager invests the investor's money into fixed income instruments such as government bonds, corporate bonds, money market instruments, etc. And if you talk about debt mutual funds, it carries relatively lesser risk as compared to equity mutual funds, and thus it is suitable for investors who are more towards conservative side. So investors who are looking for stability in returns can definitely invest into debt mutual funds, and not just the conservative investors, any investors or even aggressive moderate investors would want to have certain debt exposure into their ideal asset allocation, they can definitely invest into debt mutual funds. Now moving on to the types of debt mutual funds, please note that there are 16 different categories of debt mutual funds as per SEBI. And when it comes to debt mutual funds, we know that it is less riskier than the equity mutual fund. But again, in these 16 categories also, there is a varied risk component which is involved, and we need to understand that in detail. These 16 types are categorized based on the investment tenure and nature of the bonds or the underlying nature of the investment here. Now, based on the investment tenure, there are 10 different categories of debt mutual funds. So, out of 16, 10 are based on the investment tenure. So, let us see which are these. The first one is overnight fund. Now, this debt scheme will invest in overnight securities having a maturity of 1 day. Second is liquid fund, and these schemes will invest with a maturity of up to 91 days. Next is ultra short duration fund. Here the maturity will be 3 to 6 months. Low duration fund is for 6 to 12 months. Money market fund for maturity up to 1 year. Short duration fund for 1 to 3 years. Medium duration fund duration of 3 to 4 years. And medium to long duration fund duration of 4 to 7 years. An investor can invest in a long duration fund with a duration of more than 7 years. And last one, that the 10th type will be dynamic bond fund, and it is a debt scheme that invests across all their durations. You may check the average maturity of the fund, and if it matches with your investment tenure, then you can invest into this fund. Now, apart from these 10 different categories, there are 6 more categories based on the nature of the investment. So, first one here is corporate bond fund. Here basically the investment is made into high rated corporate bonds. Next will be banking and PSU fund. Here the scheme predominantly invests in debt instruments or banks, public financial institutions, public sector undertakings. Apart from this, you have gilt fund and gilt fund with 10-year constant duration. Again, here the investment will be made in government securities. And another type is floater fund. Here the scheme will invest into floating rate instruments. So these are some of the categories where you can invest. Now basically, if we talk about nature of risk involved here, gilt funds will have the least amount of risk because again the money will be invested into government securities. That is why the risk is least. Another type, the 16th type of debt mutual fund is credit risk fund. Now this is a highly risky fund, and thus we do not suggest or recommend anybody to invest into this fund. We have also made a detailed video on a credit risk fund and why you should not be investing into this fund because it carries very high risk. So for more details you can check out that video also. Now, after you have selected the fund based on the average maturity matching with your investment horizon, there still be 30 to 40 schemes under each category, and it will again be more confusing as in which scheme to invest your money into. And that is where there are few more parameters that you need to check before you select the best debt mutual fund for you. So the first one here would be to check the credit rating. So check the credit rating of each of the securities in the portfolio of a debt mutual fund. Higher credit ratings are usually AAA, A1 plus, AA plus minus. Anything below this will be a lower credit rating and default risk increases. Higher credit rating means that there is very less probability of the company to default, and thus it is suggested to select those funds where the majority of the securities are of higher credit rating. The second important parameter is to check modified duration. Please note that along with the credit rate risk, debt mutual fund is also exposed to interest rate risk. And interest rates and the NAV of the funds moves in the opposite direction, that is, they are inversely related. So when the interest rates increases, the NAV of the fund falls. But how much it will fall depends upon the modified duration, and that is why it indicates the sensitivity of the interest rate movements on the fund. Debt funds with longer modified duration will face greater movement in the NAV as compared to the debt funds with a shorter modified duration. The third thing that you need to check is yield to maturity. Now it indicates potential returns a fund can generate for the investor. Higher YTM means that there could be higher returns along with higher risk as well. So higher return, high risk will be involved. Longer duration funds tend to have higher YTM usually. Fourth is to check the investment portfolio to understand the concentration risk of the portfolio. Now, too much exposure to one particular company should not be there, because if that company defaults, then the NAV of the fund will fall drastically. But what we need to do is we need to check the portfolio and understand that it is well diversified, and even if any one company from the portfolio defaults, it should not adversely affect the performance of that particular scheme. So these were some of the factors that you need to keep in mind before selecting the best debt mutual fund for yourself. Also remember that you need to make sure that you are aware of your risk appetite and your investment horizon while making this decision. We hope this video was useful for you, and for more such videos do subscribe to our channel.